Yo guys, today I'm gonna share you my strategy that made me multiple six figures at just 19. So it's only gonna be a few simple steps and let's just get into it. So just before we get into it, I want to show you the actual proofs and example that this strategy actually works. You can see it of course from the verified tracker. Let me refresh for a second and then you can see right here my channel where I literally upload every single trade I take. Of course you have live sessions and you have just normal trade recap. So you can basically check out everything after this video so you know that this model actually works. So let's get into it. Okay, so this video is gonna be literally full course of my whole strategy. So by the end of this video, you're going to literally understand everything from A to Z what you actually need to do on the chart. So we are going to learn about 3 confluences, so that's all we are going to use throughout this video. I'm going to show you exactly how to spot liquidity in the market, because a lot of you have told me that you guys have trouble basically spotting liquidity on the live charts, and today we are going to get that out of the way. And by the end of the video, you're going to have the repeatable and profitable system that works every single day in the market, and that's the point. And of course, there is not going to be more confusion and no more overthinking. So by the end of this video, everything is going to be laid out perfectly and you're going to have all the steps that you just need to follow. But first of all, let me explain you why my strategy is so good. So the first thing, why is it so good, is because we are going to actually catch the moves that the big players are taking. And how do I know that we are going with, let's say, big boys, which is institutions and banks? Basically because later you are going to see that we are always waiting for that manipulation that basically big boys or banks, institutions, I mean the guys who are like trading with trillions and trillions of dollars, we are just going to trade with them actually, because my strategy is actually based on logic. So we can literally trade any session, any pair, anything, because this is exactly how every single pair in the market moves, because this is what today we are going to learn is the whole logic of the market. And the thing number 3 about my strategy is that what I will show you today, you can either choose to do it on the lower time frame or the higher time frame. So you can basically choose whether you want to swing trade it, which means holding the trades for like a few hours, or you can like scalp trade it, which is basically just holding the trade for, I don't know, 10-15 minutes and then just get out of the market with your profits. Okay, so right now when we know everything about the model, let's actually get to steps that we need to follow. So the step number 1 is going to be, you need to spot and mark out all the highs and lows in the market. And what is the highs and lows in the market? That is basically liquidity. So let me actually show you right now what does that actually mean. So right here, basically this is step number 1. You just see a chart. So this is basically just a normal chart movement. And right now what you see is like probably this, because you guys like don't really understand where the market structure lies and how to actually spot it. So right now I'm gonna explain everything in detail. So the first thing we always go is we start from all the way to the left. So basically we are going to start from this leg down here. So what do we have there? We have the first push towards the downside. So if you don't just look at every single candlestick in the market, but you need to look at it kind of in like the waves. So you don't look at every single little push to the upside and the downside, you need to look at it like this. So this is the first push to the downside, this big one. Then after that, the market went to the upside and created all of these little highs and lows. But what we actually only focus on is like not really refined market structure, because we only look at it like waves, exactly like this. And if you want to see the next low, of course it is not going to be this little low down here. We are going to look at it refined all the way to the bottom of this move. Then what we are going to do, look for the next high. But is this going to be the high? No, because we want to look at it completely like this in a wave, because this is just the noise that is going to make a lot of people lose in the market. And then you can see a pullback right here, because it's pretty obvious that the market went to the downside, then came back to the upside right here, and then after that it just went to the downside. It is pretty simple. So right now that we know that this is what the market structure actually is in this movement, we need to basically mark out highs and lows that are not taken in the market. So this high right here, you can see that it's just already taken by this move right here. Then this high is actually untaken, so we are actually going to mark that high out. Then for example, this high right here is already taken out, and then if we look at this low down here, it's already taken out. So we are just going to mark out the highs and the lows that are actually not taken out. So it's gonna be this high up here, because you can see that market has never came up and taken it, and basically this low down here because market has never swept it. And what is basically the logic behind us marking highs and lows in the market? The logic is that a lot of people who enter buy positions, I don't know, up here or somewhere here. So let's say somebody executes a buy position up here. Where are they going to place their stop losses? So a little bit of them is going to place a stop loss right here below the most recent little low, but a lot of them is going to place their stop losses below the main low, which is this low down here. So you can see that market actually already manipulated this low down here, swept all the stop losses, and after that just went to the upside, then came up here, swept all of these stop losses from all the people shorting to the downside, basically entering sell positions, and then after it took that, it just sold off. So what can we expect later in the session? We can basically expect for us to come down here or up here and basically sweep one of these highs and lows and just reverse to another direction, because that's just the logic. Market wants to go and hunt these lows and highs and just take that liquidity from the market and actually reverse to another direction, because it is always craving for people's stop losses. So now the step number 2, we need to spot the imbalance or the fair value gap above or below the high and low that we marked. If I go to the chart right now, we do have these two highs and lows marked out. So basically, what is a fair value gap in the market? This is a first example that we are going to look at. On the left, we have this fair value gap right here. So basically, you can see that we have in total of 3 candlesticks. From the first candle's low to the third candle's high, there is a hole, there is a imbalance which we call fair value gap. And you can see that we just wicked above it and did not close above it. So that means that this fair value gap is still holding the price towards the downside, because if the fair value gap has been made while we were going to the downside, that fair value gap wants to keep the market to the downside. But then another fair value gap in this example, which this is not a really fair value gap, but I'm just gonna take it for example because this is some kind of new day opening gap, but it's not that important. It's important for us because this is a imbalance in the market. So you just look at it as a basic normal fair value gap, like let's say this one and this one, because it basically does the same thing. It's just a hole in the market, same as this hole in the market right here, and this hole in the market right here, and of course this hole right here. So it's all fair value gaps. So we just need to spot a fair value gap that hasn't been completely disrespected by the body of the candle. This is only the wick, which is completely fine by us, because we don't want to see a closure below this fair value gap like this, because if we actually get the closure like this, then that fair value gap is no longer important and it's actually rebalanced, and it just doesn't exist anymore in the market. So basically, once we know that we have a fair value gap up here and a fair value gap down here, we know that if the market comes to the downside, sweeps the liquidity and reverses, we want to see a push to the upside. But if the market goes to the upside right now like this, sweeps this high, basically this one right here, retests this fair value gap, so respects it with the wick of the candlestick, and just reverses to the downside, that's basically our picture. So right now, when we know that, all we need to do is just wait for one side to get swept. So the step number 3, which is just the final step, is once we actually get the sweep of the high and the low and tap into the fair value gap that we marked, we wait for the last fair value gap to get disrespected to enter. This may sound complicated, but I'm going to show you right now what it is. So right now, this is just the normal picture we looked at. So right now the market looks like it's going to the downside. Let's see what happened. So market actually came to the downside, wicked and took this low that we marked right here. So we took this low, we retested this fair value gap, and now what are we expecting? We are expecting for market to reverse to the upside. So how do we actually enter the market? So if we look at a chart right now, you can see that this is the last fair value gap that market created while it was sweeping the low. And what do we want to see is basically when the market sweeps the low and retests the fair value gap that is basically right here below it, we want to see a last fair value gap like this that is basically going towards the downside. So market created it while we were going to the downside. We want to see that fair value gap get disrespected. And how do we know that fair value gap was disrespected? Because we want to see a closure like this. We want to see a closure above the actual fair value gap, not something like this where we just closed inside it and wicked above, because this is not a disrespect. We would not enter this trade, but we want to see a closure exactly like this one. So you can see that this first right here, this first candlestick actually just wicked inside it and closed down here, so this is not a valid entry. But then after that we actually closed all the way above it. And what does that mean? That means that right here we would have entered, so this right here means buy. We would have put our stop losses below the low. You can put it right here, like right below the candlestick, or you can put it below the low right here. But what I personally do, I put it below the candlestick wick or the body. And the next thing, basically, you can either, now this is completely up to you. I'm going to show you later in the examples what you can choose. It's completely up to you whether you want to target 1-to-1, 1-to-2, or whether you want to target the opposite liquidity. So it's all going to have their own benefits. So 1-to-1, it's personally what I do, and it's what has about 80% win rate. So basically, if you want 80% win rate, you want to target 1-to-1. 1-to-2 is going to have about 70% win rate, and if you want to do that, that's fine. And then of course for the opposite liquidity, I can't really tell you the win rate because it's all the time going to be some kind of different opposite liquidity. It is going to have different sizes and everything. So you can see that this trade actually played out all the way to that final TP up there, which is an opposite liquidity. Okay, so let me right now show you the example on the actual chart. So the first step that we told that we need to look for is basically for the market structure. So if we look to the left, what we can see right here is basically that we have some kind of huge push to the upside like this, and then after that we have a retracement to the downside right here, and then after that we made a little push to the upside like this. So you can see it by the colors of the candlestick. So basically, if you look at a refined structure, it's going to be something like this, but we don't want to look in such a details. But in this example, when we don't have such a information on the higher time frame picture, because it looks literally like this, we can always look for something like this where we can just see highs and lows in the market like this. And what we can do is just mark out those lows. For example, this low down here, that is untaken low, because you can see that these lows are already taken out. And of course, after we take the lows out, market always likes to reverse. You can see then after we took this one, market reversed to the upside, and then we have this untaken low right here, I mean high, sorry, and also we have this high right here. The market swept and then reversed right after it. So that is basically step number one. So we can remove all of these, and basically that leaves us with these two lows and highs in the market that we are just waiting for us to sweep. So right now what we do have in the market, we have a fair value gap right here. So fair value gap is just 3 candles and a hole in between them. So you can see a perfect hole right there. Then if we look to the left, we have this fair value gap down here, and then we have a small fair value gap up here. So basically we can see that this fair value gap is holding for now. And let's just right now see what the market does. So we done 2 steps, and now we are missing for basically a sweep, tap into a fair value gap, and an entry model. So let's see what will happen. So market is heading to the downside. Oh, actually it isn't. So market actually reversed right before it took this liquidity, went to the upside, swept this liquidity. Let's see what happens right now. So looks like the market, this is the fair value gap the market left us. So this is the only fair value gap that can give us an entry model right now. So you can see right here, market swept liquidity, tap into the fair value gap. Let's see if we can get the disrespect of this fair value gap right now. So are we gonna get it? So right now we still didn't. We just tapped into it, but no inversion, and there it is, a perfect inversion. So if we enter the short position right here, and right now it's a decision on you whether you want to target 1-to-1, or whether you want to target 1-to-2, or you want to target the opposite liquidity. So 1 is the most logical, of course, is the opposite liquidity, and 2 are just the mechanical, where you are going to see your win rate the most cleanest. So let's see what will happen in the market right now. So it just skyrocketed to the downside. So let's see what actually happened right now. So after we took this take profit right here, market swept this liquidity, and right now market tapped into the fair value gap perfectly. You can see perfect tapping, and what we have is actually this fair value gap right here. If you want to enter long positions, Of course, I am showing right now an example on 1 hour time frame, but if you want to do it for scalp trading, what I would advise you actually is to go on the 15-minute time frame, mark out highs, lows, liquidities and fair value gaps, and then once we get a sweep of liquidity and fair value gap, you can basically enter anywhere from 1 minute to 5 minutes to find your entries. You can just find what works best for you. So let's see if we actually get this entry to the upside. So right now market is looking like it's going to give us entry, but we still don't know. So here is an entry, and basically if we enter the market right here, so right now we can put our stop loss on bottom of this wick of the candlestick. But why I don't like to do it, because this is the fair value gap that we actually inversed, and I don't like to put my stop loss above the bottom of it, so I always put it like this on the actual bottom of the fair value gap we inversed. And what can we target? We can target 1-to-1 or some kind of liquidity to the upside. So let's see if you're going to get 1-to-1, which is basically this high up here. Okay, so let's see if you're gonna get it. And there it is, actually perfect TP, and you can see that you would have gotten 1-to-2 and also this liquidity up here. So this strategy just works beautifully in the markets. Also, after one more example, I'm gonna actually give you something for completely free. And also, if you want, you can like, share and subscribe this video. That would mean just a lot to me, because I'm putting in the effort to actually show you guys this, and that would just motivate me to keep going, because I know you guys appreciate it and like it. So actually, what do we have right here? If we look to the left, we have a setup that I haven't shown you guys. So basically, if we go back to right here, just before these two setups, and if we look to the left, we can see that we swept liquidity right here. We have a small fair value gap, but it's still a fair value gap up here that we just basically perfectly tapped in. So if I zoom in all the way, we just perfectly tapped into it, reacted like crazy from it, and you can see that actually this fair value gap right here, we have inversed to the downside. So basically this would be our entry like this, and if we would target 1-to-1, let's see what will happen. Will this be a winner or what? So it's a little bit slower of volume, and right here our TP would have gotten hit. So basically this is just how beautifully this strategy is working. It's like it's presented everywhere in the market. So you guys try it out in the backtesting, and trust me, you will see the results. And as I promised you guys, I'm just gonna give you something for completely free, which is a complete 10-page playbook, complete about the whole strategy that I'm teaching you guys right now. All you need to do is go down there to the description and press the link, and you're just gonna be able to claim it for completely free. And also guys, if you haven't subscribed, make sure to do it. It's completely free, but it just lets me build this nice community and let me know that I'm doing something right. And also, if you will like the video, that would also mean a lot to me. Comment anything you want, ask any questions, I will answer everything. And basically that's it. I'm just gonna see you in the next video. Peace.